It's Friday, July the 3rd, 2026. You're listening to the DX Today AI Daily Brief. Today, Washington moves closer to voluntary standards for releasing powerful AI models. Microsoft launches a new company built to get enterprise AI deployments over the finish line. And a weak June jobs report lands in the middle of the debate over AI and hiring. Let's get into it.
The United States government is in advanced talks with major AI companies over voluntary standards for releasing powerful new models, and an announcement could come at as soon as the week of July 7th. According to reporting first published by the Financial Times, the discussions cover benchmarks, release timelines, and rules around who can access advanced models inside and outside the United States. The talks reportedly include Google, which has advanced coding models on its release calendar this month. The effort signals a shift in AI policy away from broad safety language and toward operational control over how frontier models actually reach the market. For developers and enterprise customers, the central question is predictability, rules that reduce national security risk without slowing launches or pushing buyers toward foreign alternatives.
From policy to deployment.
Microsoft has launched a new operating business called the Microsoft Frontier Company, backed by a $2.5 billion investment and staffed with 6,000 industry and engineering experts. Announced Thursday, the unit embeds those experts directly with customers to co-design, deploy, and continuously improve enterprise AI systems. Notably, the company is model agnostic. It will help customers choose the best mix of models, whether they come from Microsoft, OpenAI, Anthropic, Google, or the open source community. Early partners include the London Stock Exchange Group, Unilever, Land O'Lakes, and Accenture. The move acknowledges a persistent gap in the market. Enterprises are buying AI at record rates, but many deployments stall before delivering returns, and Microsoft is betting that hands-on engineering is the missing piece.
Now to the labor market.
The Bureau of Labor Statistics reported Thursday that the United States economy added just 57,000 jobs in June, well below expectations of roughly 110,000 and the weakest monthly gain in 4 months. The unemployment rate held at 4.2%. The report landed squarely in the middle of an ongoing debate about artificial intelligence and hiring, as companies across the technology sector continue to redirect spending toward AI infrastructure while keeping headcount growth restrained. Economists remain divided on how much of the slowdown can be attributed to automation versus broader economic caution. But with AI capital spending still accelerating and payroll growth now averaging well under 100,000 jobs a month this year, the question is growing louder in Washington and on Wall Street.
Inside Meta's own reckoning.
Meta chief executive Mark Zuckerberg delivered an unusually candid assessment at an internal town hall on Thursday, telling employees that the company's AI agent development has not accelerated in the way leadership expected over the past 4 months. The remarks stand out because Meta has spent much of this year positioning itself as a frontier AI contender, pouring tens of billions of dollars into infrastructure and aggressively recruiting researchers for its superintelligence labs unit. The admission suggests that even the best-resourced players are finding that progress on autonomous agents is harder to buy than compute. For an industry that has promised agents will transform work this year, a reality check from one of its biggest spenders carries real weight.
Anthropic eyes the public markets.
Anthropic has engaged the United Kingdom law firm Freshfields to advise on preparations for an initial public offering, according to reporting from The Information on Thursday. Freshfields brings serious credentials to the assignment, having advised on Google's acquisition of the security company Wiz and on ServiceNow's purchase of Armis. The engagement is one of the clearest signals yet that Anthropic is laying formal groundwork to become a publicly traded company. The AI developer has seen its valuation soar past $900 billion on the strength of its Claude models, and an eventual listing would rank among the largest in market history. Anthropic has not commented publicly on any timeline, and an offering would still be many months away at minimum.
Defense money moves next.
German drone maker Quantum Systems closed a $1.2 billion Series D round on Thursday, valuing the company at roughly $8 billion. The round drew backing from Blackstone, Airbus, Advent, and Notius, and it ranks among the largest defense technology financings Europe has ever seen. Quantum Systems builds autonomous aerial systems and battlefield software that lean heavily on artificial intelligence, and its rise reflects a broader shift in venture capital. Investors are now backing dual-use startups that can field drones and autonomous systems faster than traditional defense contractors. The war in Ukraine turned defense innovation from a niche category into a core strategic market, and European startups are increasingly positioned as serious challengers to legacy military suppliers.
Sovereign AI, deployed in hours.
Second Front Systems and Cohere announced Thursday that they successfully deployed Cohere North, the company's secure AI platform, in a live edge environment in the United Arab Emirates, and the installation took under 2 hours. The deployment ran aboard an Armada galleon, a portable containerized edge data center, demonstrating that a sovereign AI stack can be stood up in the field without a traditional cloud region. The speed matters as much as the location. Governments across the Gulf and beyond are demanding AI systems that run inside their own borders on infrastructure they control. A deployment measured in hours rather than months gives Cohere and Second Front a compelling proof point in the fast-growing market for sovereign and defense-grade AI.
Tesla tightens the purse strings.
Tesla is putting a ceiling on employee spending for artificial intelligence tools. According to an internal memo first reported by The Information, the company will impose a $200 per week limit on staff AI spending beginning Monday, July 6. The policy makes Tesla one of the first major companies to publicly grapple with a new line item that barely existed 2 years ago: per employee spending on coding assistants, chatbots, and agent subscriptions. As AI tools have become standard equipment for engineers, the costs have climbed sharply, and some power users can burn through hundreds of dollars a week on premium models. The cap suggests that even companies betting their future on AI are starting to manage it like any other corporate expense.
Wall Street gets new agents.
LinqAlpha raised $22 million in Series A funding on Thursday to build specialized AI agents for institutional investors. The round was anchored by AVP, Atinum Investment, and GFT Ventures, with participation from financial institutions and venture firms across North America, Europe, and Asia. The platform uses purpose-built agents to help hedge funds and asset managers identify market signals, connect information across asset classes, and support deep investment research. The bet is that generic chatbots fall short in public markets work, where accuracy, sourcing, and speed determine whether research is worth anything at all. LinqAlpha joins a growing cohort of startups racing to become the AI research layer for professional finance, one of the sectors adopting agents most aggressively.
AI heads to the factory floor.
CarbonSix raised $40 million in Series A funding to develop AI automation and robotic intelligence technology for manufacturing, according to reporting on Thursday. The company is building systems that let factory equipment perceive, decide, and act with less human programming, part of a wave of investment aimed at bringing modern machine intelligence to industrial production. Manufacturing has long been a stubborn frontier for AI adoption. Factory environments are unforgiving, tolerances are tight, and errors are expensive. But investor appetite is rising as labor shortages persist and as reshoring pushes companies to automate more of their production lines. The new capital positions CarbonSix to expand its engineering team and scale deployments with industrial customers.
Faster shovels for the build-out.
Build, a startup automating due diligence for data center development, raised $8.5 million in seed funding led by Index Ventures on Thursday. The company says its AI can cut months of site sourcing, permitting review and paperwork by up to 95%. The timing is hard to argue with. Demand for AI infrastructure has created a bottleneck that has nothing to do with chips, land, power, permits, and construction schedules are now the binding constraints on the build-out. Startups that remove friction before ground is even broken could become critical picks in shovels players. For developers racing to bring capacity online, compressing the diligence phase from months to days translates directly into revenue.
One more from the UK.
British startup StirlingX raised a $20 million Series A round, announced Thursday, to expand its secure data intelligence systems for defense and critical infrastructure. The financing follows an $11 million seed round and reflects the same momentum lifting defense technology across Europe. StirlingX builds platforms that let defense agencies and infrastructure operators analyze sensitive data with AI while meeting strict security requirements, a capability in growing demand as governments modernize intelligence workflows. With European defense budgets expanding and procurement reform opening doors for younger companies, investors see an opening for startups that can clear security accreditation and still move at commercial speed. The new funds will support hiring and deployments with government customers.
That's your briefing for Friday, July the 3rd, 2026. For DX Today, stay curious.